Oh, hey guys. Sorry, did you hear me like clear my throat? Too funny. So happy to be back. We have a lot of information to unpack on today's live. Um, okay. So for starters, today was the official announcement from the Fed that they are tapering their asset purchases. So for those of you who are unclear of what that means, is back in when they first announced like all of the stimulus that they were proposing for COVID, they announced that they were going to one, do forbearances, and that two, that the government was going to start buying mortgage backed securities to one, stabilize the mortgage market because interest rates were all over the place, and then to incentivize buyers with low interest rates to continue to purchase. And it created this entire refinance frenzy, this purchase frenzy. And so they're starting to taper off those purchases. Obviously, they aren't going to overnight stop buying them, but they are going to start decreasing them. And then they're going to start like managing to see like, so what happens is they reduce their purchases and then they see how the market reacts and then they purchase more or buy less depending on the reaction of the market. So today, like expected, we did see a bump in interest rates. Now, I don't know that that was so much the reaction of the Fed tapering's announcement, and all also coupled with the fact that the ADP numbers just came out for new job creations. And so the estimated number was going to be somewhere around 400,000. It actually showed up at 571,000, which is way over expectations. And so those official numbers on new job creations and then jobless claims, which is the unemployment numbers, come out on Friday. But any news now that's in relation to the economy stabilizing, growing, improving are going to mean that the Fed will have less incentive to keep purchasing mortgage-backed securities, which is not good for rates. So I'm going to be doing a really in-depth video on how we saw this play out during the recession. And it just to give some of you guys like some like sigh of relief. It's never just like a straight line up incline. What normally happens is that we have these knee jerk reactions. We'll see a bump, then we'll see it trickle down a little bit, then we'll see another bump, and then we'll see it trickle down. So it looks like in a long term, looks like a staircase incline versus just like a straight up incline or a straight diagonal. So there will be a time when interest rates go back down. So, but I don't think that we're going to see the historical 2% lows like we have seen. So just know that today marks the date that we're starting to see an official turnaround in interest rates. Obviously, you know, I can't tell the future if anything else happens, in the economy, right? And I will keep you updated on that. Okay, so I want to say hi to a couple of people who are joining us. We've got Mark Asher, who's an excellent agent here in Phoenix that we work with. We've got Rod and Laura. Rod, give Laura my best. I'm wishing her nothing but a speedy recovery. Andy A, Eric, we have El Chico Timido. El Chico Timido. Nice to see you guys. Make sure that your questions are in the chat so that way I know to add what to answer. And then also, if you guys let me know like where you're at in the home buying process, how much you know about it, it helps me kind of cater to your guys's experience and what you guys might be needing in terms of information. Okay. So I just gave you that information. I also do want to touch on some big information that was released this week because there's a lot of headlines and a lot of agent opinions on the fact that Zillow has stopped all of its iBuying programs. And so some media outlets are saying, hey, is this a sign of a real estate crash? Lots of real estate agents are celebrating this news. iBuyers coming into the real estate arena is really annoying for a lot of industry professionals. One, because they're harder to deal with, quite frankly. Like we have a property that didn't appraise on a Zillow transaction right now. And my client had a hard set move date. They have movers, they have a home they're selling. And like it's literally been 2.5 weeks with no response to the point where like we're sending a cancellation notice to protect the client's earnest money when in general we should have received a response right away. on whether or not they were going to proceed with the contract or not. So it is just insanely like much harder to deal with those types of institutions. In addition to lots of clients, for the sake of ease of use, will forego lots of equity and will end up having hidden costs like additional repairs and things of that nature that they weren't prepared for. So just in general, a lot of us in the real estate market aren't super in favor of these iBuyers. However, they've created another option for clients to be able to move without a bunch of hassle. So, I mean, definitely serves their benefit. But they did say that they're halting their iBuying, which means that there'll be less, less corporate competition in the marketplace. They have about 7,000 homes nationwide. A large concentration happens to be here in Phoenix that they have to liquidate. Now, a lot of home buyers might think that they're going to be selling to home buyers, but just so you know, the information that they have put out is that they're looking for another institutional buyer. So I don't think that it's going to increase the amount of inventory that we have in our local market as much as people might anticipate. They're looking for another, again, like iBuyer type situation to offload these homes onto. And oh my gosh, oh my goodness, guys, we just got a super chat from Darren Buttery. Oh my God, one of my most favorite and longtime YouTubers. He is amazing. You're so super awesome. And I will 1000% donate this money. Just so you guys know, all of the super chat money goes to this local organization called ASA Now. And what they do is they provide the hardest hit, most at risk youth that are in foster care with after school programs, mental health. Uh, therapies, and they provide a lot of assistance to foster families. So absolutely 100% will make that donation in her name. And just, so you know, my heart goes out to you. I read your email and literally like put me into tears. So anyway, sending you so much love, honey. All right. So let me know if you guys have any questions at all on what I just said about Zillow, what I said on the real estate market, and let's get to answering some of these questions. Okay. So, okay. So if a house isn't ready during the walkthrough, how can I push back on the closing date? So it depends on what's actually needed to close escrow. So occasionally, if you don't have a certificate of occupancy on a new build, you can push back your close of escrow date. But a lot of times, builders will push to make that a prior to funding condition. This is where a good real estate agent makes sense, right? If you have somebody who's representing you well, they will make sure that that close of escrow date gets pushed out so you can do the proper inspections, the proper walkthroughs. But that's what I would recommend. Now, I mean, you can always do a final walkthrough on the day of your closing. And if it still doesn't meet your expectations, you as the buyer can say, hey, I'm not comfortable with recording. And again, that agent can go to bat for you and make sure that all the repairs are done. But you as the buyer have to make sure that your docs are in place, that all of your conditions have been met, and that you are not in breach of contract at any point. So those are your options, Andy A. Okay. So tell me when I'll be able to afford a house in California. I only make 75,000 a year. So here's the problem is that one, there's so many variables to qualifying for a home loan. And California has a variety of different zip codes with all different price points. So it's really hard to say, with 75,000 income, I mean, you could probably purchase a house now in California, just maybe not in the area that you're looking for. My best suggestion is honestly to get with a loan officer, set a budget, figure out your best qualifications for, down payment goals, for budget goals, for monthly payment. But I mean, 75,000 isn't enough information for me to go on to tell you whether or not you can qualify. Okay. All right. So let's see here. I got a new build. Close of escrow is scheduled for 11/8. Did a final walkthrough today and was informed by the city is rejecting requests for final walkthroughs for certification of occupancy. Lock ends 11/19. Okay, so here's the deal. You can call the municipality yourself and find out what the delay is. And then you can also expedite your request. You just have to speak to a manager and let them know of your contract date and your lock expiration. Typically, when there's a financial hardship that they are aware of, right, they typically will expedite these requests. But worst case scenario, your loan officer should be able to extend the interest rate. It may cost you 0.25%, but it is something well worth paying for, especially in this inclining, interest rate market. Okay, so how do I minimize the financial risks associated with buying a property with zero down USDA? I plan on renting it out after 2 to 3 years. The biggest thing that I always tell people with rentals is that you have to make sure that one, you have enough money for maintenance, future repairs, and that you have money enough for reserves. A lot of times I see people buy with 0% down and wanting the property to cash flow immediately, and they're underprepared for things like a roof repair or, flood damage. And so it's super, super important that you just make sure that you are saving money and being prepared to be a good and decent landlord, right? So, that means that in case of, God forbid, another forbearance, right, that a renter not paying you rent for 6 months isn't going to put you into foreclosure. Or if, like, the whole roof needs to be repaired and that's $14,000, right? That you have enough money to repair that. So just, keep that in mind. I mean, depending on like what you have planned for budgeting, I always tell people if they can set aside at least 10% of their monthly income for a rainy day, you'll also want to set that aside once that's completed for, maintenance and repairs. Like 25% at least of all of your rent should be going towards that too. All right. Is it still a good idea to refinance? I have a 3.25 fixed rate and I'm getting a quote at 3%. So my rule of is always, if you're saving $200 a month or 1%. Now I mean, if you're just saving 1/4%, I probably wouldn't refinance, but I also don't know if you're taking cash out or changing occupancy or what the reason is that you have to refinance. A lot of times people have to refinance because they're in a divorce situation. So if it's just to save 1/4%, I'm going to say that it's probably not enough incentive to refinance. Um, what do I recommend to have in emergency savings? So I always tell people at least 6 months. And especially like there's a lot of people on the internet that say 3 months. General mortgage guidelines are 1 to 6 months. I like 6 months because honestly, it's enough rebound time. Like if you've lost a job, for you to, have enough time to find a new one, or if you had a significant, you know, costly repair, like you needed to purchase a vehicle or, you needed to make mortgage payments because of an illness or something, it's enough bandwidth. I say maximum 12 months, but at least 6 months in like a money market account that's, at least has some kind of interest accruing on it. So you're not losing all that money to, inflation. All right. So J Law says 2.99 to 3.188. Yeah, again, I still don't think that's enough savings. Okay. I have a dispute on my credit. Do I need that removed before I can get qualified? So one, that depends on the type of loan that you're purchasing in. So if you're doing conventional financing, almost always you'll need to reverse that dispute. And then if you're doing FHA, it depends on the amount of the collection or the liability that's in dispute, whether or not it's been paid. Now, in some cases where the dispute is valid, like let's say somebody stole your credit, we can do a manual underwrite for both conventional and FHA, but you have to prove that again that it is absolutely not your debt, right? So a police report filed is typically what they ask for. All right. So Emily asks, how did I learn guidelines, rereading flashcards, what sites? You know, Honestly, I I had the benefit of being a loan processor before I was a loan officer, and I worked for a pretty high producer, who also had really high expectations for not messing up. And so I got what's called an MRI guide, which is just like their books of guidelines, and I still to this day order the most recent ones every quarter. And, essentially, after a while, you have the basic guidelines memorized. I would say after 200 reviews, like, you basically have most guidelines memorized, and then whenever I see something that I haven't seen in at least 6 months, I always look it up. So I mean, that's the best thing that I can tell you. I did also have a friend who would every Friday night would read a chapter like on read the whole chapter on credit, read the whole chapter on assets. So that is also something that you can do. Okay. Um thanks Trevor. That's hilarious. I have no life and I've dedicated the last 20 to this career. So I appreciate that I can be your walking talking mortgage encyclopedia. I don't work with clients in Virginia. I'm only licensed in Arizona, but if you do need a good referral, if you email my team, I literally work with the best network of loan officers throughout the country. I'd be happy to refer you. Um, so my friend has a work permit. Can he get a loan? Yep, absolutely. You can definitely get a loan, any type of loan with a work permit. The only guideline is that it has to not be expired and you have to have a history of renewals, right? So we have to be able to show a 2-year working history. And and so this happens a lot in Arizona. So we have clients that, let's say, are within like 1 to 2 months of expiration, right? So long as they've had a history of renewal and we can show that they've applied for renewal, even that person can get a loan. Now, the only time that you cannot get a home loan with a work permit or a work visa is one, if it's expired, and two, if it's only a temporary work visa. So, like people sometimes come here on student visas, have jobs. Because that type of employment we can't prove continuance on, it isn't allowed. So, I hope that helps. Okay. So I'm gonna go. Ooh, I think I brought the questions this time. I have like super sucked at any email questions in. So Jen, I know I'm missing these. So if you catch them, if you'll also just kind of put them into the chat. So I do super appreciate that you guys email these questions in and that you put them on other formats. But sometimes we get so many questions in here that I don't always get to them. So just an FYI. Okay, so Jessica asks, what is PMI? Do I have to have it? Is there any way I can still get an FHA loan but not pay PMI? So this is a common question that I get, especially because FHA is the type of loan that allows for lower credit borrowers to qualify or higher debt to income ratio clients to qualify. And because it's a higher risk loan to the bank, meaning that you put minimal down to get it and they have more flexible guidelines, there's always mortgage insurance included on these loans, both financed in your loan and then paid monthly, because the bank is rolling the dice on whether or not you'll pay it. So even when you put down 20%, 25% down on an FHA loan, you will still pay mortgage insurance. Now, the good thing is that most homeowners will have enough equity within 2 to 3 years to refinance into a conventional loan, and if you are working with the right loan officer and making your payments on time, not maxing out credit cards, you should be able to do this within that time period. So I hope that helps. Okay. Gabby says, does it ever make sense to go for USDA if you qualify for conventional? I'm exploring my loan options and see a lot of conventional versus FHA, but nothing comparing conventional versus USDA. So the thing is that USDA areas aren't available throughout the country, and a lot of YouTubers spend a ton of time focusing on the majority of what helps, solve people's problems. Like in Phoenix, most of the areas are no longer USDA approved. And so, me personally, even though we've done like thousands of home loans in the last 4 years, the last time I saw a USDA loan was 5 years ago. So, I mean, it's just not that common. But the thing is, you really want to get a side by side comparison, because one of the negatives, right, with doing like a USDA loan is the amount of mortgage insurance that you'll have to pay. Um, on the home loan itself, right? And some additional costs. So you want to look that up in comparison to a conventional loan. Conventional loans will have a down payment. You'll still have to pay mortgage insurance on a monthly basis. And so it really just depends on the side by side. And you also want to anticipate if you're going to have to refinance that loan in a couple years as part of the reasons, as part of the cost comparison. So you'll want to do a side by side. In my past experience, though, USDA loans had the least money out of pocket, and because I didn't have monthly mortgage insurance at the time that I did them, and I guys haven't done them in a long time, I believe the payments actually might be less expensive. So you might want to look at that again as your side by side comparison. All right. So I'm thinking of refinancing to consolidate my debt. My minimum credit card and loan payment is $1,500. Do you suggest a HELOC or a refi? Okay. So because interest rates are going up, I definitely recommend doing a cash out refinance to pay off debt, but only if it's debt that you aren't going to have to reoccur. Okay. So a lot of people like reincur debt, right, for things like automobiles and credit cards. And so you end up losing equity versus changing your spending habits. So you really want to look at that, number one. But if it is debt that you will not re-incur, definitely do a cash out refinance. It's going to be fixed for a certain time period, and it is likely that our Fed funds rate, so this is the rate that the banks borrow from the federal government, which impacts short-term loans like lines of credit, will be going up in the future too. So I would rather, depending on how much you owe, include that into a low fixed rate 30-year fixed mortgage that is extended over 30 years where I'm paying down the balance versus an interest rate that could go up as high as 18%, right? In some cases. So um that's just my 2 cents on that with having very little information about your loan. Okay, so Win the House You Love does tons of loans, and this is Kyle Seagraves, guys, one of my favorite YouTubers. He says they're very common in Ohio. Usually our clients get cash back or zero closing. Not true for all people though. So again, it's something definitely to look up, right? Again, do that side by side comparison. Um, all right. Let's see. Can my friend get a loan if he has an I-10? So not if he has an I-10. Well, that's not true too. So there are some hard money lenders that will loan people that don't have a legalized or documented citizenship. So they can get loans. They can be property owners, right? So you don't have to be a U.S. citizen to own property in the United States. But institutions like Cross Country or, like most banks, we follow Fannie Mae, Freddie Mac, FHA guidelines. And so because of that, we have to have legalized citizenship or work ability to qualify you for a loan. All right. So am I still seeing lots of market crash stuff? Yep, all the time. In fact, I think we're going to see that in the like just in general until we get into a more normalized market. So just to give you guys some anecdotal experience, so because I worked through the last crash, what was interesting to see is that the crash started literally in 2005 at the end of the year, and we didn't start talking about it until 2008. We got a gigantic like alarms, set off because the economy literally halted. And so we didn't have that ramp up period. But prior to COVID happening, we were predispositioned actually for a recession. And so what's interesting to see is that all of that stuff got sped up, all that stimulus got sped up. And so because of that, like the last like several years of the recovery, like people still thought that the market was going to bottom out literally into the 2016s. Like, I mean, it took such a long time for consumer sentiment to change about the bottoming out of the market. And I think that we're going to see that now for the foreseeable future, just because there is so much instability and insecurity with like what's going on in the government, with legislation, with policy, just in general with the banking and banking institutions. Most people grew up in the Great Recession. They saw their parents lose houses. So I don't think that this is that uncommon. And we'll still see it, I think. I mean, like with headlines like Zillow, owning 7,000 properties and pulling out of the iBuying game. I mean, that's such a big headline, you know. All right. So I'm not 100% sure what your other comment is, Chef's Kiss. I suck at like inside jokes. All right. Why is the cash out refinance rates higher than rate and term? So they're higher because the more risk you put onto the bank, the higher your interest rate is. So whenever you're increasing your loan, whenever you're adding additional liability, again, there's a higher likelihood that if you defaulted, that the bank would have penalty. So that's the only reason why. So last week I was on the live and Lizzie, you told me to ask my loan officer about locking in interest rates. Well, I emailed that night and was able to lock in at 3.25 and closing a month sooner now. Thank you. Dude, that makes me so pumped. I love it when you guys use the advice that I give you on this live and take action. That makes me so excited. It means my shirt looks good. Okay. Thanks, man. Okay, did I like not read that? Oh, that top sachet. Oh, duh. I got it now. God, I suck. I'm so tired. Can we blame it on I'm being tired? Okay. All right. So Lewis says, you know what's my favorite, guys? So my name is spelled Lizy, but most people's phones and most people's emails will like automatically correct it to lazy. And it's super funny when I see an email that says lazy on it because it makes me giggle. Like whenever I have a new employee, like no joke, the first text they ever send me will say lazy on it by accident and they won't catch it. And my sixth sense of humor makes me laugh because they'll straight up panic. But anyway, so this one says lazy. How does open credit card accounts, extremely small, 0 to 5 utilization, but 30K line of credit, affect my ability to borrow? Does closing unused, rarely used credit accounts increase the amount that I can borrow? Ooh, this is a really good question. So here's the deal. Um, in order to, so credit is rated on a variety of things: credit history, the length of time that you've had it, and utilization of the overall credit. But the thing is, like, if you have an inactive account, like if you haven't used it for months, if it's zero balance in month, it actually weights less than if you were actually charging and paying it off every month. So if you're like, I have a credit card that has literally like a couple $1,000 balance and I only use it for gas and pay it off every month, that actually helps my credit versus like leaving it at zero balance. Okay. Now, if I were to leave that at zero balance and not utilize it, that's better than if you close that account for not using it. Lots of people like to close credit accounts that they don't use, or that they just want to consolidate their credit. And the problem is when you do that, you actually limit and shorten the amount of allowable credit to your credit score. And in the short run, it actually hurts your credit score. So, yes, keep all of your credit accounts open. Let them age out naturally. We know whenever they close naturally. Don't close them yourselves. And then, yes, charge and pay off small amounts if possible. Try never to exceed more than 30% of your credit limits if you're looking for the optimal credit utilization. All right. All right. Britt says, I was pre approved for a home, but what made me stop searching was the multiple offers on homes I fell in love with. This is definitely a seller's market. Any tips for us? So here's some positive news. So mortgage applications are literally down 9% from last year, and they're down 33% just in total, with refis and purchases. And why that's important for you is because honestly, less competition is coming. And I do think that ultimately, because Zillow is getting out of the marketplace and because there's supply chain issues and labor and all kinds of issues with this iBuying process, I don't think that they're going to be as aggressive moving forward. And so I think that you're going to see a lot less corporate competition. And so I just think you just have to hang in there and then talk to your real estate agent about additional strategies. It is a tough time to purchase. It is no fun. Like, honestly, it's probably, in terms of consumer sentiment, probably one of the most least enjoyable times to purchase. But the people that are willing to stick it out, guys, are seeing double digit returns, right? So, yes, frustrating, but yes, a big return. And honestly, one of the biggest like naysayers in real estate, his name's David Rosenberg. If you look this up, actually like literally reaffirmed that statement. I mean, he's talking about how inflated the stock market is. He's talking about, how he doesn't believe in hyperinflation and he's not really secure with the economy, but he did say that for, at least the foreseeable future, people who buy real estate will see returns. So, all right. Oh my God, Talks with Q. Oh my goodness, guys. So this is a new real estate agent that just joined the Corinne Win team. I'm super pumped for him. He asks all the best questions, and I'm so excited that you joined me on this live. Says, I'm curious, do interest rates and asset purchases mirror global investment interests into our economy? Kind of, right? So it just depends on what's going on in general with the global economy when we have foreign investors that want to buy into the bond market and buy into mortgage backed securities. So typically, those types of investors buy, because like currencies in their country do like underperform what our bonds perform and what our mortgage-backed securities perform. So higher interest rates for foreign investors will be good for them because they'll see higher returns, and we'll see probably a larger emergence of those types of investors in the mortgage bond market. And I think that that's what they're hoping for. So that's actually what we saw with the last like recession happen, is that as the government stopped purchasing, we did see a lot more of like foreign investors or large government or large corporate entities that buy those types of securities for like retirement funds replace that. But it will be a gradual increase. Okay. So it says, I'm concerned about reaching out to different companies to have them pull my credit report. So here's the thing: you only have to have your credit report pulled once, and you just need to ask the right information, like what your credit score is, and then give other loan officers the exact amount of debt that's being reported on your credit, your income, and then ask them to do a quote for you. You want to match all the quotes on the exact same day because you want to do apples for apples. And honestly, guys, in this kind of market, like morning to afternoon will change somebody's interest rate depending on what happened in the news day that day. So you do want to make sure that you're like calling everyone in the morning and getting quotes. But that's another way to do it. Okay. Um, all right. And so let's see. My new build will have about 60,000 in equity. Can I do a cash out refinance? If so, how much can I take out? So typically on new purchases, when you want to use the appraised value, you have to wait 6 months and you're limited to 80% loan to value. So 80% of what the house is worth. Okay. And then in terms of asset purchases, so um, like if there's a higher increase in mortgage-backed security purchases, we will see lower interest rates. So that's how that relationship works, Q. Okay. While you're here, make sure. Oh my God, I love you. You're the best. Thank you, Kyle. I don't know why I wanted to read your whole YouTube name out. God, I'm so lame. Um, but yes, guys, definitely hit the like button if you're on this live chat. It really does help me get exposure out for the team and get exposure out for the channel. It means a lot to me just in general. So don't forget to like and then subscribe to the channel if you're not already subscribed. Okay. So Eddie asks, do I recommend putting a down payment or getting down payment assistance and why? So here's the deal. If you can afford your own down payment, I definitely think that it makes more sense to put the money into your house, especially if you're considering that real estate is a long-term investment. When you do down payment assistance, typically you're getting a much higher interest rate. Sometimes that's like 0.5% to 1.5%. You're paying additional fees. And then most people will have to refinance after 3 years, which then incurs like multiple thousands of dollars in increased loan amount that you then pay interest on for 30 years. So the cost of doing down payment assistance is not free. In fact, most of the time you're actually spending more than what it would cost you just to put it down your own down payment. So my recommendation, again, like with all things, just because loans vary in different states and different municipalities, is that you get a side-by-side comparison and that you and do it for the number of years that you plan on living in the house, and if that loan will require a refinance or not. So those are all things to consider. I don't love down payment assistance unless it's the only way for you to buy a house. And then in that case, I think that you really have to rely heavily on your budget to make that decision because you don't have enough assets, right, to really make that purchase. And the last thing you want to do is be committed to something for 30 years that's going to stress you out. So, like I tell everyone, if buying a house is going to prevent you from paying your bills and your debt, if it's going to prevent you from having the life that you want to live, like consider doing a debt plan, a budget plan, an asset plan before you make the decision to buy a house. God, guys, sorry, I keep hitting the mic. Okay. What advice would I give to a new loan officer? Well, my best advice for anyone in sales, guys, is to get a database of 300 people that know and like you and that trust you, and start asking for support, ask for ways that you can provide value, and then really start researching your guidelines. If you're a newer team member for real estate and for loans, I always recommend joining an experienced team. The last thing you want to do is practice on the biggest investment for your friends and family. So I would definitely lean on people with more experience, but I'd also start building a database right away of people that can help support you, refer you, and help you grow that business. Okay. So, hi Liz, do I think interest rates will be 4% by the new year? So, no, I don't think interest rates will rise that rapidly, but I definitely think that the interest rates in the 2%, unless you're doing like a 15-year or shorter amortization, I don't know that we're going to see those in 2022. Now, saying that though, lots of things can happen in the economy. Like so many things can happen worldwide. Like nobody could have predicted COVID just in general. So like natural disasters, wars, you know, crazy political conflicts, all of those things actually can impact interest rates. And so for today, right, interest rates are going up. I think that we'll see a gradual increase. Most experts are saying, third quarter of next year, we'll see interest rates in the fours. But like first thing in January, I don't think so unless we really start getting aggressive news about inflation or aggressive news that the economy is completely recovered. I think that it's too much for us to just rip off the Band-Aid. And I do think that they know that a slow tapering is important. Um, okay. All right. Sandy's driver says, "Hi, I was planning on selling and then buying a home. Will selling my home damage my credit?" So no, typically people do those types of transactions consecutively, meaning that they close and buy on the same day. So generally speaking, it will not have an impact on your credit. And because credit is reported like, typically 30 days in the rear. So long as you're doing this within 30 days, it should not have any impact on credit. Now, let's say that it takes you a couple months before you buy something new. Depending on what the rest of your credit looks like, it could harm your credit. Truthfully, whenever you guys close down a long-term standing credit account, unfortunately, it does ding your credit. I wish that wasn't true, but it's true. Thank you, Stephen. I appreciate you, honey. I'm glad that you've learned a lot from me. Okay, so actually, I'm just gonna go. Jen, will you put I'm getting the notifications for Instagram. If you'll just put those questions on there, I just haven't even had a chance to look yet. Okay, so it says, does a jumbo loan offer fixed rate interest for certain amount of years? So with jumbo financing, there's a lot of different ways that which banks offer this. It used to be that ARMs, so short-term ARMs, where it was fixed for 3 to 5 years to 7 to 10 years, were typically the most prevalent because they offered the lowest amount of interest. But in the last 2 years, 30-year fixed, 15-year fixed interest rates have really been just as competitive. But yes, jumbo rates offer a variety of different types of loan structures, and you can get a fixed rate mortgage for a long term if that's something you wanted to pursue. But I wouldn't be surprised if banks offered you anywhere between a 3 to 10 year fixed ARM for a jumbo loan. Okay. If Michelle asks, if a house appraises for more than what I'm paying for it, I've heard that I can use that amount and that the amount that appraised value towards my down payment. Is that true? No, that is not true. So whoever gave you that advice is confusing a refinance with a purchase. So a lot of times, especially in this marketplace, people will sell their homes and the house appraises for way more. It's the lesser of the purchase price or the appraised value. So the same way that if a house doesn't appraise, we go off of that for the down payment. It's the same thing with the purchase price. So unfortunately, it would be the purchase price in this scenario. And I'm sorry you got misinformation. Okay. So, any advice on buying homes with leased solar panels? I'm applying for a conventional loan. All right. I'm going to give you guys my 2 cents on solar panels, and then you guys make your own decisions. Okay. You would never own a cell phone literally for 30 years. It is crazy to me that people finance solar panels for such an extended period of time when technology is constantly advancing. But typically speaking, you will have to include that solar payment in the qualification of your loan. So you'll want to talk to your loan officer about that. And then also, there are sometimes, let's say, if you have debt to income ratio restrictions, depending on the type of lease, they might be able to omit that. There's certain guidelines for that, and they're different for each loan type. So you'll have to look into that. But just in general, like solar panels will add an additional thing that you have to consider when you're selling your property. Because one, people will have to qualify to assume your lease. And two, not everyone wants solar panels attached to the house they purchase. All right. So, Liz, how competitive is cross-country mortgage on interest rates as opposed to credit unions? Do you match rates provided credit union? So honestly, it typically depends on the scenario and the type. Most companies will do like a mortgage interest rate match if what they have isn't the most competitive. Like I know at our company, I just have to get a fee estimate and I take it up to my management and they'll give me approval to match it. Sometimes, unfortunately, like there are companies that just buy into the market. We aren't able to match, but I'll always try to give you my best advice for what you should be doing. But I would say that we're competitive. I mean, we do a lot of loans, and I don't genuinely hear on a regular that we're not competitive in terms of rates. Again, I'm biased, and I tried to give you like literally the most honest answer I could. Okay. So Lindsay says, when your team gets set up a credit plan for someone else, what does that entail? So, guys, for us, we are not credit advisors. We're not people who like do credit repair, but we do get like simulations offered by the company that we run our credit reports from. And so typically a credit plan will, just require us to do some simulations with paying down debts or, doing some additional credit strategies. And based on what that simulation says, and we'll provide that to the client. And then typically what we'll do is follow up with them on those types of goals to see when they're ready to start the home buying qualification process again. So that's what that entails. Chris says, what systems and tools do I use to keep my days in order? Jen, that's such a funny question because you could probably answer that better than me. Okay, guys. So, truth is, I have OCD. So, like, I have a variety of systems that keep me organized in one day. And when I say OCD, I don't mean like joking OCD, I mean like actual OCD. So, in general, for me, like, I literally have a notebook of undone tasks that I carry with me at all times. I also set serial reminders for every question that gets asked upon me because I just know I'll forget. And then Jen's job is literally to keep me on track and remind me of things. So, I mean, it is a lot of reminders, but when you think about the fact that I have OCD, it makes sense. And honestly, I do get like hundreds of emails every single day, and I do my best to try to respond to every single person. Okay. Okay, perfect. So I answered all those questions. Okay. Oh, Julie asks if there's any creative ways that she can qualify for more of a house. So, yep, the most creative ways to qualify for more houses, one, look at debts that you can pay off that will increase your bandwidth for mortgage qualification. So, it's for every $5, it's about $1,000 in purchase price. So, look at what you can eliminate in debt, right? So, sometimes like a $1,400 credit payment will have a $197 payment. That was literally something that I did today, which is why I remembered it off the top of my head, right? $197, right, is quite a bit of buying power when you divide that into five, right? So that's one easy way. The other thing is ask your loan officer if they've considered using any additional income that you have. So a lot of times I'll get, like loan saves where people are like they're unhappy with their qualification amount, and I look and I see that their paycheck stubs include like overtime bonus, shift differential, and the loan officer just wasn't using the additional income to help them qualify, or their guidelines at their bank is that they have to have 2 years versus 1 year. And so a lot of times you can ask them if they're able to use additional income. Buying out mortgage insurance is another strategy for qualifying for more loan. And then also like, checking loan types. So like FHA allows you to, go up to 56 point something, almost 57% in debt to income ratio. So look at those different loan types, also help you maximize your DTI. Okay. Um, Rajni says, does paying off a car loan substantially drop my credit? So again, guys, it just depends on when you do it. Yes, again, closing any type of loan, any type of credit line will hurt your credit. Now, typically, if they're closed, like I said, within the time period that you're closing, probably not. But like another thing is that 6 months after closing the accounts, um, they really don't even have any impact on the overall like equation for your loan. So you just want to be aware of that. So try to pay it off like at close of escrow if you need it to for your debt to income ratio. But if not, I would do it after your loan closes. Okay. Um, Okay, so hi Lizzie, what do the new build houses start at in Arizona? Oh, so unfortunately, I mean, I don't know 100%. I want to say like in the 300s and up. Um I like see so many loans, but I don't actually like, visit different new build communities or different homes. But if any of my real estate friends would like to answer that for AW on this live, that would be super huge. Um if you could give them a range of new build costs. All right. So, Steven says, I'm looking to apply for an LOA position as I want to learn from an experienced loan officer to get better at this business. What's a realistic starting wage for an LOA with little experience? Um, well, it just depends, right? So, it depends on the area and it depends on like what you're willing to do. So, a lot of times, I would say anywhere between like 15 to $20 an hour plus a bonus, but it really just depends on, the area and the rate of pay and then what you're able to negotiate. Um, oh, yay. Thank you guys. You're so complimentary. I appreciate the love. All right, guys, let's get some more questions in here. It's way easier for me to read them here than it is here. If you can't tell, I'm struggling. I think I need glasses. Lately, everything's been like, and when I replay the lives, I can tell when I can't read something. Okay. All right. So lots of questions on Zillow. So I think I tackled that. How long do I need to be working at my new position in order for my income to qualify along with my husband's to get a bigger home? So that just depends on so many things. It's such a general question, even though it sounds super specific. So, one, do you have a 2 year employment history? So, a lot of times people will start a brand new job and haven't had any employment history or had a gap of longer than 6 months. And so, what I will tell you is that it will take 6 months plus your previous 2 year history to qualify, right? So, we have to make sure that, with the new history, that you can at least complete 2 year history. So, if you have that, then it's going to be 6 months if there's a gap. Now, if you're just getting a brand new job in the same line of work and you're getting paid the same type of way, so like W-2 salary, hourly rate, and they're taking out federal, Social Security, um, all those taxes, then you're good to qualify with an employment letter and pass the background check. And then we just have to get a first, paycheck stub typically before or one right after close of escrow, depending on your strengths of your qualification. So that's the answer to that question. But honestly, like your specific scenario requires a loan officer because there's so many different variables, situations in which I might have just not done you justice by giving you a general answer. So talk to your loan officer. Okay. All right. So Cornell says, Lizzie, just tuning in. Any updates on homes coming to the market after the 6 months after the forbearance ended? Maybe short sales. So, all the news that I've read on this is that there really isn't this large amount of shadow inventory that's coming due. Um, so what they have said is that the hardest hit people, the people that were in the worst financial straits, are actually now just coming off of forbearance and will come off of forbearance in December. So I think that it's a pretty good chance that you guys will see some distress sales. So people that have to sell their homes now because there isn't that additional extension. Now, I think the last time I read this, and if you Google this and it's not this, but the last time I checked, there was like 4% of homes nationwide that were underwater. So, no, I don't expect a lot of short sales, truthfully, but I do think that there'll be some distress sales. And I do think because we are not going to see the competitiveness of the corporate buyers. Hopefully in 2022, I think that will also be increasing our supply. But guys, in order for you guys to see a dramatic change in home values or home prices, you have to remember that we're still on a huge shortage of actual houses. Like inventory is still historically low. And so until that changes, until there's way too many houses and less people that want to buy them, I just don't see where values are going to change. So, yes, I think more likely to get a deal. Will there be deals everywhere? No, you still got to look for them. Okay. All right. Gabby D says, my boyfriend's mom said she's willing to give us some money for the down payment. However, my boyfriend wouldn't be on the loan. Is that typically allowed? No. Well, yes and no. So, in order to receive a gift on a home loan, typically they have to be a family member or a documented deep relationship, which is very difficult to prove. So, if your boyfriend's mom is going to give you money and she is not going to be on, or he is not going to be on the home loan, either I would have her co-sign for you, right? So then it's no longer a gift and it's just assets, or I'd have her give the funds to one of your family members because they can get a gift and then give it to you. But that's the only way that I can see it, working. Because he's not technically a qualified source for your gift funds, and neither is she. Okay. All right. Is overtime pay used as long as it's in your net income? Uh, so overtime pay is used to qualify you if it is stable and going likely to continue and typically receive for a minimum of 1 year, but typically 2 years. Okay, so that's when we're allowed to use additional income like that. How can I add my wife to the title of my home? I have the mortgage. So typically in that case, I wouldn't necessarily recommend that you add her to the mortgage. You wouldn't be able to. You'd have to add her to the title of the home, but I would generally get a trust. Um, and trusts like don't void out your title insurance, which is why I like them. And two, it gives so much additional specification for what needs to happen to your assets if something should happen to either one of you. So that would be my recommendation. But if not, if you just want to do it, you can do a quick claim deed and then get her added that way. Matt from IG says, what debt to income ratio? Oh, what is a debt to income ratio? How do I figure it out? So typically how you figure it out is you take your gross income plus all of your debts and the new house payment. And then you divide the debts plus the new house payment into your income, right? And so that's what it becomes. Typically, most loans will want a 45% debt to income ratio. Some loan programs allow for 56%. But there is what's called a housing ratio, and this is way, way complicated. So you might as well just talk to a loan officer. But your housing ratio also matters. And so you typically want your housing ratio to be under 45%, typically under 40%. And so that's the new house payment divided into your gross income. All right. So, is it possible to purchase an investment property without paying points? Currently buying a property with 20%. Broker says there's no par rates available without paying points. So, unfortunately, that is probably truth for that particular broker. But you can always shop your loan around, and there are brokers and bankers that can give you an investment loan without paying points. It'll just be at a higher interest rate. And so that is always something that you can do. Lots of times people take things as hard and final facts because they heard it from, an experienced and reputable loan officer. But in this marketplace, guidelines vary, interest rates vary, loan costs vary so much, and more than they ever have. Like literally this year and last year, mortgage guidelines can vary quite a bit between mortgage company. And so if you're not getting the answer that you want, I would definitely shop it around. Okay. So Ria says, will it hurt if I apply for grants while I'm in the process of getting a home loan? I need help. So typically, grants and down payment assistance should be done well in advance of applying for a mortgage if you're under contract. You can get pre qualified and then apply for your grants, but you never want to be under contract and then applying for grants. And not because it hurts your credit, but because those programs take quite a bit of time to get qualified for. And you really want to have all of that figured out prior to getting under contract. So I see a lot of people try to do this and it just makes their home loan process like imagine it's already the second most stressful event in your life, short-term event, right? First is death of a family member. And then on top of it, you decide to go through a government nonprofit company that literally only works 9 to 5, never on the weekends or evenings, and literally has hundreds of people before you. It's like you couldn't add more stress to your home buying situation. So that's what I would recommend. Now, there are lots of really, really great programs. Um, and you know what's so awesome about this? No one ever asks me about NACA. Okay, but that program I don't believe really exists. I mean, I know that there's lots of people who say that they've gotten it. I think it's like a unicorn or the Yeti. I've never seen one, never talked to anyone physically that ever got it. So that is not one that I recommend. But like that, if you like Google a lot of these down payment assistance programs, they do take forever, right? And we're talking about like several weeks. Oh, so let's see here. I just got an important question. Um, Oh, love this. Okay. So I got a screenshot from one of my old escrow officers and they were asking again what my opinion is going to be on the real estate market in general. So if you guys missed that at the very beginning, today was the day that the Fed announced that they are tapering all of their asset purchases for mortgage-backed securities. So today will mark the day when interest rates are inclining. And like I said before, I do not expect that interest rates are just going to shoot up and skyrocket. I think that we're going to see knee-jerk reactions where a spike in interest rates and then it'll come down, and then a bigger spike in interest rates that'll come down, and it'll look like a staircase. So this is going to be the type of market where you really have to talk to your loan officer, really have to pay attention to the news, positive economic news, better unemployment rates, more jobs created, inflation going down, positive news with the economy will mean higher interest rates and probably those like knee jerk reactions. Okay. So that's what's happening with that. If you guys have more questions, I am literally going to be doing like a more in depth video on what that looked like during the last recession because it's all we got to look at. But I'd love to hear like what specific questions you have aside from just like my general opinion on interest rates. Um, Okay, so Theo says, if I have to move and rent your primary home prior to the 1 year of homeownership mark. Oh, what happens if you have to move? Okay, so if you have to move and you don't hit the 1 year homeownership mark, I think you're fine so long as the intention was to live there the entire time. One thing to consider though is that if you don't live there the 2 year period of time, you will pay capital gains on that if you are selling the property. So that is one thing that you have to consider. But typically, when it comes to occupancy, so long as you are in good faith buying the property and living in it the way that you have agreed to per your purchase contract and per the loan documents, there isn't a penalty. Oftentimes we see this like, a job relocates somebody across state or people get divorced or something happens, that requires them to move or rent out their property. So long as you can show that that wasn't the intent, and what I mean is like sometimes people say they're going to live in the residence and they have a lease agreement, signed like the next week. So long as you can't, you can show that you had good faith intention, you're totally good. All right, guys, I got time for 1 to 2 more questions, so get them in there. I'm going to be asking a couple more from the list here. So it says, Marcy says, I own a home but feel that it would be a good time to buy an investment property. Is there a back channel way to do this? I see a lot of videos getting lists of people getting lists of homes that are delinquent and knocking on doors. Is there a loan for sale like this? Yeah, so you can buy any kind of whenever you get under purchase contract and you're under contract, you can get a conventional loan, even if it's for a distress sale where somebody's like, in the middle of foreclosing or they have to do a short sale. The caveats to that are that you have to close before that property actually forecloses, or you have to get the bank to agree to sell you the property for less than what the property is owed on. So those are things that you have to consider. Now, the lists of property that are in default, you guys, typically that comes from the title company. So, or you'll have to buy them in public record. And typically what you're looking for are notice of trustee sales. And it gives you like a 3 month window before somebody forecloses, and you can go knock on their door and you can call them to see if they'd be willing to buy. In most cases, those people are really looking for cash offers. But if you can get them to accept a contract, right, you can do a regular conventional loan, okay, for an investment property. Lots of wholesalers will be calling to try to sell you properties like this. Lots of real estate agents also know of clients that are willing to sell their properties like this. And so again, like I said, it's always a good idea to reach out to people. Now, one thing about wholesale contracts is that they are not governed by the same laws that govern real estate agents. And there is a lot of fraud, unfortunately, done with them. So you really do want to make sure that you're working with a reputable person, right? You would hate to pay crazy fees and penalties and then find out you're getting screwed. All right. Oh, Steven, you're so funny. I'm definitely not the best. I wish I was the best, but thank you for that comment. Okay. Sean asks, can I buy a home as a primary residence so I can put little to no money down and then turn it into an Airbnb? So, in order for it to be your primary residence, you have to occupy the home like 51% of the time, and you cannot have long term tenants in there. So, hypothetically, you can have a primary residence that you Airbnb on occasion, but it cannot be its full time purpose. And so, you do want to pay attention to that because again, if your intention is to make it a rental and you're financing it as a primary residence, technically you're committing mortgage fraud. And if you read your loan documentation, there's some pretty significant penalties for doing those types of things, like jail time, gigantic fines, your notes due and payable. I mean, it's no fun. So, like, honestly, guys, there's a way to do things on the up and up. There's always a way to hit your goals. But I think generally what you're asking me would probably not be permittable. Right. Okay. Awesome. Okay, guys. All right. So we hit the top of the hour. I didn't see any new questions. I appreciate you guys tuning in. Don't forget to hit that like button and subscribe to the channel. I'd love to be able to provide you with even more value. So let me know what you guys need and tune in to next week's live.